William Gann's foundational philosophy posits that markets are not random but operate in predictable cycles, governed by universal mathematical and geometric laws. He believed that everything in the universe, including financial markets, functions within a system of order and harmony. At the core of his analysis was the profound interrelationship between time and price, a concept he often emphasized by stating that time is more important than price. This means that specific time cycles, rather than just price levels, are critical for forecasting significant market turns and movements. Gann's work demonstrated that by understanding these underlying rhythms, traders could project future price action and reversals. He meticulously integrated geometric figures such as squares, circles, and angles into his charting techniques, using them to identify crucial support and resistance levels, trend directions, and exact points of market equilibrium or imbalance. These geometric applications provided a visual representation of the hidden mathematical order he perceived in the markets. The Gann Box stands as a cornerstone of William Gann's technical analysis toolkit, designed to segment both price and time into equally proportioned sections, thereby creating a predictive grid. Its construction begins by identifying a significant high or low point in the market, then encompassing a defined range of price and time from a previous trading cycle. This historical range is then projected forward, with the assumption that market behavior tends to repeat in similar patterns. The Gann Box essentially draws a grid over a price chart, where horizontal and vertical lines represent key price levels and time intervals respectively. These lines and their intersections within the box are not arbitrary. They are meticulously derived to reveal critical levels of support and resistance, potential price targets, and, crucially, projected periods for market reversals. Visually, as the price action unfolds within this grid, the lines and their various intersections within the Gann Box dynamically form what Gann referred to as pressure points and natural lines of resistance, guiding traders to anticipate future market direction and turning points with enhanced clarity. Expanding on Gann's geometric vision, the Gann square encompasses a broader set of principles, notably the profound one-to-one ratio between time and price, which forms the fundamental basis of its construction. This ratio signifies that for every unit of time that passes, the price is expected to move by one corresponding unit, creating a perfect square on the chart when properly scaled. Achieving this proper scaling is paramount for accurate analysis, ensuring that a 45-degree angle on the chart truly represents a one-to-one relationship, where 1 unit of time equals 1 unit of price movement. The general Gann square is employed to uncover deep-seated patterns in the interplay of time and price, thereby identifying significant levels of support and resistance. It provides a visual framework to observe how price reacts at specific temporal and numerical junctures. A more specialized and widely recognized application of this concept is the Gann Square of Nine, a unique numerical system that spirals outwards from a central starting point. This intricate square arranges numbers in a specific pattern where each number represents a potential price level. The genius of the Square of Nine lies in its ability to translate mathematical relationships into potential market turning points. As prices reach numbers on the Square of Nine, especially those aligned on cardinal or ordinal crosses, they often signify zones of significant support or resistance, based on William Gann's theory of time and price balance. Traders use this tool to determine potential buying and selling levels, as well as to project specific target levels like resistance R1, R2, and support S1, S2. Its dynamic nature also makes the Square of Nine remarkably effective for identifying intraday trading opportunities, allowing traders to pinpoint short-term reversals and price targets with a high degree of precision, provided the correct starting point and scale are applied. Achieving the ideal entry requires a meticulous understanding of how the Gann Box and Gann Square strategies converge to pinpoint optimal buying opportunities. One primary method involves identifying robust support levels, which are clearly demarcated by the horizontal lines within the Gann Box, and the specific numerical alignments on the Gann Square of Nine. When the price approaches these predefined levels, they often act as strong magnetic zones, indicating potential areas where buying pressure is likely to overcome selling pressure, signaling a favorable entry point for long positions. Furthermore, Gann angles serve as dynamic levels of support and resistance, offering crucial insights into the strength and direction of the prevailing trend. The 45-degree angle specifically, representing a perfect 1-to-1 ratio of price to time, is considered the most significant. An ideal entry might occur when the price bounces off an ascending 45-degree angle, confirming the bullish momentum, or when it retests a broken angle from above, indicating a continuation of the trend. The synchronization of time and price, a core tenet of William Gann's philosophy, further refines entry timing. By observing Gann's intricate time cycles, traders can anticipate specific periods when the market is poised for a significant move or a major reversal, thereby optimizing the moment of entry. These temporal windows, often coinciding with specific calendar dates or astrological alignments that Gann studied, can amplify the effectiveness of entries made at identified price levels. For instance, a concrete rule for entry could involve buying when the price decisively touches the dark blue 50% line of the Gann box from below, especially when it aligns with bullish green squares on a Gann square interpretation. This specific confluence of price level, time cycle, and geometric confirmation provides a high probability setup, offering a structured approach to entering trades with confidence and precision, moving closer to that elusive perfect entry. Just as crucial as the perfect entry is the masterful execution of the ideal exit, which involves securing profits and mitigating potential losses with equal precision. The Gann Box and Gann Square strategies provide clear directives for pinpointing optimal exit points. Resistance levels, precisely delineated by the upper horizontal lines of the Gann Box, and the specific numerical configurations on the Gann Square of Nine, serve as natural targets for profit-taking. As the price approaches these predefined resistance zones, the probability of a reversal or a significant slowdown in momentum increases, signaling an opportune moment to exit a long position and lock in gains. Similarly, Gann angles are invaluable for determining when to close a trade. If a price breaks below an ascending Gann angle, it often indicates a weakening of the upward trend and suggests that the price is likely to move towards the next nearest angle below, signaling a prudent time to exit a long position. Conversely, for short positions, breaking above a descending angle would prompt an exit. To illustrate with specific rules for profit realization, one might consider exiting a long position when the price reaches the green 125% or 150% lines of the Gann box, which can serve as the first and second profit targets respectively. These lines are projected extensions derived from the initial box, indicating where the market's momentum might naturally culminate. Equally important is the disciplined placement of stop-loss orders to protect capital. The Gann box strategy offers clear guidelines for this, recommending the use of defined levels such as the red -25% line as a strategic point to set a protective stop-loss. This level, derived from the box's structure, acts as a critical boundary, indicating when the market's movement has invalidated the initial trade hypothesis. Adhering to these precise exit and stop-loss rules, combined with robust risk management principles and appropriate position sizing, is paramount. Effective risk management ensures that even when trades do not unfold as anticipated, potential losses are contained, preserving trading capital and fostering long-term success within the dynamic framework of the box and square strategy. Implementing the box and square strategy effectively requires a methodical approach to setting up and interpreting these powerful tools on your trading platform. For platforms like TradingView, the Gann Box and Gann Square tools are typically available within the Drawing Tools section. The first crucial step involves selecting a significant high or low point on the price chart as your anchor. This initial pivot point will serve as the starting reference for constructing both the Gann Box and the Gann Square. From this anchor, you will define a specific range in terms of both price and time, often encompassing a prior significant swing or cycle. The accuracy of your analysis hinges heavily on proper scaling, ensuring that your chart's price-to-bar ratio is correctly adjusted so that a 45-degree angle truly represents a one-to-one relationship between price movement and time elapsed. Many platforms offer a lock price to bar ratio or scale price to time feature to achieve this critical calibration, without which the geometric integrity of Gann's methods is compromised. Once the tools are correctly applied, the next phase involves analyzing the market's symmetry. Look for instances where the lines, angles, and arcs generated by your Gann box and Gann square align with historical support and resistance levels or previous significant turning points. This confluence provides powerful confirmation of the validity of your drawn structures. Interpreting the signals requires combining insights from various elements. A potential entry might be indicated by price bouncing off a Gann box support line that also coincides with a significant angle from the Gann Square of Nine, especially if these alignments occur during a projected time cycle. Similarly, a potential exit could be signaled by price reaching a Gann box resistance level while simultaneously breaking below a key Gann angle. Mastering these tools demands diligent practice, keen observation, and the ability to synthesize multiple geometric and temporal signals into coherent, actionable trading decisions, transforming complex market data into clear opportunities for strategic engagement. Mastering the box and square strategy is not merely about drawing lines on a chart. It is about cultivating a profound understanding of market mechanics and embracing a disciplined, systematic approach to trading. This powerful methodology, rooted in William Gann's intricate geometric and temporal theories, offers an unparalleled framework for identifying those coveted ideal points of entry and exit. By meticulously applying the principles of the Gann box, the general Gann square, and the highly specific Gann Square of Nine, traders gain a distinct advantage. They learn to perceive the underlying order within market chaos, anticipate reversals, project price targets, and manage risk with a level of precision that few other methods can rival. The ability to synchronize time and price, to recognize geometric patterns, and to interpret these complex signals empowers traders to make informed decisions, moving beyond speculative guesswork towards calculated opportunities. However, the journey to proficiency with Gann's methods demands more than just theoretical knowledge. It necessitates unwavering discipline, consistent practice, and the adaptability to dynamic market conditions. The markets are constantly evolving, and while Gann's principles are timeless, their application requires careful calibration and continuous refinement. Successful traders who utilize the box and square strategy are those who dedicate themselves to rigorous backtesting, live observation, and a commitment to continuous learning. They understand that perfection is a pursuit, not a destination, and that each trade offers a valuable lesson. We strongly encourage all serious traders to delve deeply into the study and practical application of this extraordinary strategy. Embrace the challenge, commit to the process, and unlock the potential for truly precise trading decisions. For those eager to deepen their understanding of William Gann's groundbreaking work and explore the foundational concepts that underpin strategies like the box and square, we highly recommend his classic treatise, Truth of the Stock Tape. This seminal work delves into the intricate world of market cycles, the psychology of speculation, and the mathematical harmony Gann observed in financial movements. While the insights contained within are timeless and invaluable for any aspiring or seasoned trader, it is important to note that the original historical charts presented in the book can be of low quality and challenging to decipher, reflecting the printing limitations of its era. Nevertheless, the theoretical framework and philosophical underpinnings it provides are indispensable for grasping Gann's unique perspective on market dynamics. Dive into this rich historical text to connect directly with the mind of a trading legend. Find Truth of the Stock Tape by William Gann via the link in the description below and begin your journey toward mastering the market's hidden rhythms.